Welcome to Daily Crypto, episode 39. Get ready for another deep dive into the fascinating, sometimes pretty wild world of digital assets.
Absolutely. It's moving fast.
Yeah, so our mission today is really to cut through all that noise, pull out the key insights from what's been happening in crypto lately, basically give you a shortcut to being well-informed.
A necessary shortcut these days.
Definitely. We've got a lot to unpack. Market movers, the whole institutional finance dance with crypto,
Right, that push and pull.
emerging security threats, which are always scary, and the latest thinking from, the big names in the space.
It feels like we're always at some kind of inflection point.
That's a good way to put it. Blurring lines between disruption, integration. Yeah, okay, let's just dive in.
Yeah.
Okay, so let's unpack this. Where does the market stand right now? What are the big numbers jumping out at us? How are the major players doing?
Well, we've definitely seen some significant movement. Bitcoin is currently sitting around $109,536.
Wow.
And Ethereum is at $2,592.14. And Bitcoin pushing past that $109,000 mark, that's not just a number, right?
No, it feels bigger. Psychological barrier.
Exactly. It's a key psychological and technical barrier. Signals some renewed bullish feeling, which, often ripples across the whole market.
And Ethereum. Still the backbone.
Pretty much. Yeah, it's the backbone for so much of the decentralized ecosystem. So its price is also a crucial benchmark. Tells us about network health, developer activity, that kind of thing.
Okay. And then beyond the big two, what about the altcoins? Are any really catching the eye? Any unexpected movers signaling something new?
Oh, absolutely. Yeah, beyond Bitcoin and Ethereum, we're seeing some notable shifts, especially in the meme coin space, interestingly.
Oh, really? Like what?
Well, Bonk has shown a pretty remarkable gain, nearly 20%, and Popcat is up over 16%.
Wow. Okay. So not minor changes.
No, not at all. These aren't just small fluctuations. They kind of reflect the current market dynamics, where community buzz and that viral potential can still drive these really big, rapid price swings.
So the meme coin thing isn't dead yet.
Apparently not. It tells us that even as the industry matures, that speculative, high-risk, high-reward side of things, still a powerful draw for some people.
What's interesting, too, is Bitcoin's surge. It seems like it's lining up with broader financial trends, maybe. Is there some hidden fuel there, or is it part of something bigger?
Yeah, that's a good point.
Yeah.
If you connect it to the bigger picture, the wider financial markets are showing strong activity. NASDAQ surging.
Right.
And that could very well be fueled by, a mix of things. New trade deals, positive jobs data, and, this is key, hopes for Fed rate cuts.
The rate cut hope affects everything.
Pretty much. When traditional markets feel optimistic and there's more liquidity, risk-on assets like crypto often get a boost. It sort of suggests investors are seeing Bitcoin less in isolation now.
More like part of the global portfolio.
Kind of, yeah. Sensitive to the same macro winds. And also worth noting, XRP looks like it might be set for a double-digit surge.
Oh, why is that?
Well, the source pointed to 3 powerful catalysts. Didn't detail all of them, but typically that could mean things like a good regulatory outcome, maybe more adoption of Ripple's payment product.
The ODL thing.
Yeah, on-demand liquidity for cross-border payments or maybe new partnerships, stuff specific to its ecosystem driving that momentum.
Okay, interesting. Let's switch gears a bit. The intersection of TradFi and crypto. This always feels complex.
It really is, that constant push and pull, like you said, between innovation and caution.
So what's the latest with the big institutions and the regulators? What's happening there?
Well, it's definitely a mix, progress and hurdles, which is kind of typical for an industry finding its feet.
Right.
So, for instance, Grayscale's big attempt to convert its large cap fund into an ETF that's currently in limbo.
Still, why?
The SEC halted the approval process. It just highlights that ongoing regulatory scrutiny, especially for these bigger established players trying to bridge into traditional investment vehicles.
So the SEC is still being pretty cautious.
Very cautious, measured approach, focusing on investor protection. Which, it can slow things down. It doesn't necessarily stop mainstream adoption, but definitely slows the pace.
But it's not all delays, right? Are we seeing any real breakthroughs, signs that institutions are getting maybe more comfortable moving beyond just speculating on Bitcoin?
Precisely. Yeah, there have been some really significant steps forwards. The first U.S. Solana staking ETF, it just debuted.
Oh, wow. Okay, how did that go?
Impressively well, actually. Pulled in $33 million in volume and $12 million in inflows right off the bat.
That is significant. What does that tell us?
Well, it's a pretty clear sign of growing institutional comfort. and specifically interest in staking products. So they're not just looking for price exposure anymore.
They want yield. They want to participate.
Exactly. Actively participating in network security, earning yield, and it also expands the menu of crypto products that traditional investors can actually access.
Okay, that's big. Any other examples?
Yeah, another one. The Swiss Amina Bank. They've become the first global bank to support RLUSD trading.
RLUSD. Remind me.
It's a regulated stablecoin, comes from the TrueUSD issuer, but it's really focused on institutional use cases.
Gotcha. So a bank actually integrating it.
Right. It's a major step for getting stablecoins into traditional banking. Shows that regulated financial institutions are starting to really incorporate digital currencies into their core operations. Paves the way for smoother digital asset transactions within TradFi.
And speaking of integration, Ripple. They're making a really bold move, aren't they?
Right.
Trying to get even deeper into the system.
Yeah, this brings up a critical point. Ripple has actually applied for a national banking license and a Fed master account.
Whoa. Seriously, what would that even mean?
Well, if they get it, it could massively impact how XRP functions, potentially gives them direct access to the Fed's payment systems.
Like a real bank.
Pretty much.
Okay.
Allowing Ripple to offer traditional banking services right alongside its blockchain stuff. It's a really ambitious play for deep, direct integration.
So the regulators.
Yeah. Well, yeah. As Paul Atkins, who's a big voice on the regulatory side, keeps emphasizing, the SEC has this tough job, right? Balancing crypto innovation with enforcement.
A tightrope walk.
Exactly. How do you foster all this rapid tech growth, but also protect investors and keep markets stable without just crushing the innovation? That's the constant challenge.
Okay, let's shift focus a bit. Infrastructure security, always crucial. What are the main threats and maybe innovations popping up?
Yeah, on the security front first, there's a pretty concerning report. North Korean hackers. Again, this time targeting macOS in their latest malware campaign, and specifically going after crypto firms.
Why macOS?
Well, it's widely used in tech and crypto circles, right? And maybe there's a perception it's inherently safer, leading to some complacency, perhaps. It just underscores how persistent and, frankly, evolving these threats are. These aren't amateur hackers.
No, state-sponsored, sophisticated.
Exactly. Using supply chain attacks, clever phishing, targeting high-value entities. And then, sort of related, there's another warning out.
Yeah.
Over 40 fake wallet extensions found on browsers, detected as malware threats.
40? Wow. How do those work?
They often look exactly like the legitimate ones. They trick users into giving up their private keys or maybe signing a malicious transaction.
Ouch.
Yeah. It just emphasizes you need extreme caution, like triple check everything when you're using browser-based crypto stuff.
That's a really stark reminder of the risks users face just trying to interact with this stuff. Okay, so beyond the threats, what about the visionaries? Like Vitalik Buterin. He often has sharp insights into the deeper challenges, right? Decentralization, the future. What's he saying lately?
Yeah, Vitalik's been quite vocal recently. He's critiquing what he calls fake decentralization.
Fake decentralization.
Yeah, he likens some projects to straw houses, basically warning against projects that claim decentralization but actually keep centralized control points, makes them vulnerable.
So just decentralized in name only.
Kind of. He's really pushing for genuinely robust, truly decentralized systems. He's even laid out ways you can sort of test if a crypto firm is really hack-proof and decentralized. It's a useful framework for evaluating projects.
That's helpful. What else?
What's really interesting is his belief that crypto has reached an inflection point.
We keep hearing that term. What does he mean by it?
He signifies it by the mainstream adoption we're seeing from big players. So it's not just about price anymore. It suggests the industry is maturing, moving past those early experimental stages.
Right, towards something gaining real institutional public recognition.
Exactly. Which demands more resilient and genuinely decentralized infrastructure to support it.
Okay. Are there any other ecosystem developments we should know about? Things that affect how crypto is used or built beyond just currencies?
Yeah, definitely a couple of interesting things. JP Morgan's Connexes platform, they're testing carbon credit tokenization.
Carbon credits on the blockchain. Wow.
Well, it's a fascinating example of crypto's potential outside of just finance. Think sustainability, real-world asset tokenization. Blockchain could bring transparency, efficiency to environmental markets, make it easier to track and trade those credits.
Okay, so moving beyond just financial applications, that's cool. Anything else?
And Coinbase. They made an acquisition, Liquify. They said it's to arm themselves for what they call on-chain's messiest phase.
On-chain's messiest phase. What does that mean?
It sounds like they're anticipating a big surge in complex transactions, lots more DeFi interaction, more users, leading to potential congestion, maybe a messy user experience.
Ah, okay. So Liquify is meant to help with that.
Yeah, it aims to simplify and streamline those on-chain interactions. It shows Coinbase is really focusing on practical real-world usability, preparing for potentially much higher transaction volumes and complexity on the actual blockchains.
Makes sense. Okay, let's zoom out again, connect crypto to the bigger economic picture, and then, yeah, we got to touch on the meme coins.
The wild side.
Definitely. So, what are the economists, the analysts saying? Crypto's place in the broader landscape.
Well, we're seeing some really provocative and honestly contrasting views. Arthur Hayes, for example.
Always has an interesting take.
He does. He suggested stablecoins are going to play a crucial role in funding U.S. debt, which in turn could actually boost Bitcoin.
How does that work? Stablecoins funding debt boosts Bitcoin.
The idea is complex, but basically it intertwines crypto deeply with national fiscal policy, creates a scenario where digital assets aren't just alternatives, but active participants in government finance, maybe creating a new source of demand or stability that benefits Bitcoin. It's a provocative idea.
Definitely provocative. Okay, who else?
On the completely other hand, you have someone like Balaji Srinivasan, the ex-Coinbase CTO.
Right, what's his view?
He asserts there's basically no fix for the U.S. debt, much more pessimistic outlook on traditional finance.
Okay, so what's the implication for crypto then?
Well, his view suggests that this pessimism could push people towards alternative assets, like Bitcoin, as a necessary hedge. A hedge against economic instability, maybe even hyperinflation down the line.
Wow. So really different takes. One sees integration, the other sees crypto as an escape hatch.
Exactly. It highlights that fundamental debate about crypto's ultimate role. Is it a hedge, a parallel system, or somehow an integrated part of a changing financial world? We don't know yet.
Fascinating to see those clashes.
Yeah.
Okay, now, the meme coin world. It seems to operate by its own rules sometimes.
It really does, driven more by community virality, less by traditional fundamentals.
That's happening there, still dynamic.
Oh yeah, incredibly dynamic, often defies conventional analysis. Moodang and Bonk were highlighted as top ones to watch this week.
Bonk again, still climbing.
Yeah, seeing significant price action, reinforcing those recent gains, and showing continued community interest. Then there's Dogwifhat, currently described as kind of range-bound, stuck between about $0.30 and $1.35.
So questions about whether it breaks out or just consolidates.
Right, will it expand soon? Who knows? These assets, I mean, they're undeniably volatile, highly speculative, but they capture serious investor interest.
Why, though? Just the community.
Mostly, yeah. The community-driven nature, the viral potential, it leads to these incredibly rapid, totally unpredictable price jumps. It's a unique cultural corner of crypto.
Definitely unique. And we can't ignore some of the more, let's say, colorful news items that pop up. Reminds you it's not all charts.
No, definitely not. There's that recent headline, right? The Australian crypto billionaire?
Oh, yeah, the kidnapping at house.
Escaping by apparently biting off an attacker's finger.
Wild.
It's an extreme story for sure, but it kind of captures the unpredictable, sometimes genuinely perilous nature of this space, even totally outside the market moves.
A vivid reminder, like you said, that there are real-world, sometimes high-stakes consequences tied to this digital wealth. So wrapping this up, what does all this mean for you, listening to this, trying to navigate the crypto landscape? It's clearly always evolving. New breakthroughs, new challenges, almost daily.
Yeah, it's incredibly dynamic, requires constant attention, doesn't it? A nuanced view.
Definitely.
And if we put it all in that wider context, it really does underscore Vitalik Buterin's point about that inflection point.
Right. It feels like that's where we are.
Yeah, we're seeing the core tech maturing. Institutions are engaging much more deeply. Regulators are actively shaping the frameworks. That indicates a real shift, from niche interest to something more mainstream.
Brings legitimacy, but also new complexities.
Exactly. But at the same time, the market is still really susceptible to those external economic pressures we talked about, and these new novel security threats keep emerging. So you need that vigilance, that sophisticated understanding.
Which brings up a final question, maybe something for you to think about. As crypto does become more mainstream, more integrated with traditional finance, how do you see its role evolving? Could it actually address bigger economic challenges like national debt, as Hayes suggested? Or is it more the hedge that Balaji sees?
It's the core question, really.
Yeah. And how does thinking about that influence your own approach? How you understand these assets, how you engage with them? Definitely something worth mulling over as you think about the future of finance and maybe your own strategy within it.
Food for thought.
Indeed. Well, thank you for joining us on this deep dive today. We hope you feel a little more well-informed, maybe ready to explore some of these ideas further on your own.